Hello and welcome to this week's episode for SPY Trader Now. I am your host. My name is Ken. Today is April 1st, 2023, and our model portfolio is up 5.2% year to date. The S&P 500 buy and hold investor had a fantastic week last week, and they, because of last week's action, actually surpassed our model portfolio on a year-to-date performance. They are up 6.92% year-to-date. Our goal here at SPY Trader Now is to beat the performance of the S&P 500 buy and hold investor, and we do that by using a three-position portfolio. We do that by either holding shares of the S&P 500. We buy the ETF symbol SPY, and that's why our handle is SPY Trader Now. And we also buy and sell options, and we also have cash. Cash is a position, so we do a three-position portfolio. Currently, I have the allocation at 78% in stock. Although we don't actually own shares of stock, we have a cash secured put. I'll show you that later on in the presentation. But I put that money from the cash column into the stock column in case we get exercised on our option. We have the cash ready to be deployed to buy those shares of stock. So that's why I put it in that column. But this is where we are currently stand. We've had 10 round trip trades year to date, and we're doing well. Let's move on with the presentation. Our past results here at SPY Trader Now, last year we had a very good year, up 21% compared to the buy and hold investor, who was down 19%. 2021 we're up 78%, and 2020 fantastic year, 100% return on investment. If you want to see how I do this, please go ahead and hit that subscribe button, ring that bell to be notified when I post a new video, and do me a solid and smash that like button down for me right now to help me promote this video. Thank you. Okay, so here is a one-year chart of the S&P 500. We're going to go through the charts in much greater detail in the presentation later on. Now, here at SPY Trader Now, what we do is we buy, sell, and trade the S&P 500. Last week, here is our trade that was made on 3/30. We did a cash secured put with an expiration of 4/5/23. That expiration date is this line here, the second line over. And this first vertical line, that's where we place the trade here. And because of yesterday's action, obviously we're doing well. We're fine in our position. We have no threat of losing money on that trade. Okay, and last week the S&P 500 on a weekly basis gained 3.45%. Okay, here's the trade that we made last week. We did on 3/30/23 cash secured put, expiration 4/5/23, and we did two contracts or 200 shares. We got $1.30 in premium, which equated to $258 to add to our total portfolio. And we're still in this trade. It doesn't expire until 4/5/23, so we have to just sit tight and wait till 4/6/23 to figure out what our next move is. Here is our equity curve for 2023 SPY Trader Now, and here is the equity curve for the S&P 500. And here's the two equity curves on a side-by-side comparison year to date. Right now you can see that as of the last week is where the SPY buy and hold investor surpassed us, and they just completely had an incredible week. And here is where we stand on the Fed rate hikes for 2023 and 2022. The last rate hike, 25 basis points, was on March 2nd. That brought the federal funds rate to 4.75 to 5%. Here is Jerome Powell, the chair of the Fed. And we have the terminal rate going to 5 to 5.25. So we have a forecast of one more rate hike this year in 2023. The next Fed meeting is on, the announcement will be on May 3rd, and we could potentially get a 25 basis point rate hike on that meeting. So it's about a 50-50 chance right now that that's going to happen. Now we're looking at it from a bond market outlook. We still have an inverted yield curve. What that means is the long-term treasury rates are at a lower yield than the shorter term 91 day and 2-year yield. Those are higher interest rates. That's an inverted yield curve. This is going to correct eventually. Definitely within the next 12 months it's going to correct. Something's going to happen. And we also have a rising interest rates. 1 year ago, the 10-year was at 2.41. Today we're at 3.46. Although it's not much, it is still a rising interest rate. So from a bond market outlook, the bond market is telling us to be out of stocks and just be in the sidelines, because it's not a good perspective when you have an inverted yield curve and rising interest rates. Here's a valuation for the S&P 500. It is considered overvalued as of last week's action. The current S&P 500 10-year price to earnings ratio is at 28. This is 39% above the modern era market average of 20% PE. Or 20 PE rather. So this is where we stand. We're currently at the +1 standard deviation, which is in the overvalued column or section. So that's where we stand on a valuation standpoint. It's difficult to make your trading decisions based off of this. I'm just putting this out there for information right now, because you can still go from an overvalued to a strongly overvalued and obviously make money. But when you start getting into that strongly overvalued, extreme caution is totally advised. But where we stand right now, we're still okay. On the fear and greed index, we stand at a neutral posture. So that's where we stand on that index. Now we're looking at it from a seasonality standpoint. The seasonality of SPY going back 20 years. In the month of April, where we just started, there's a 79% probability that we're going to close the month higher than when we opened. We haven't even opened the month yet, because today is April 1st, but it's a Saturday. The last trading day was in March, which tells you that right here. Friday, March 31st, where the market jumped 3.71%. This is a candlestick. The candlestick on this green colored candlestick tells you that we opened the month here and we closed the month here, which means we're going to open the new month of April somewhere around this level, depending upon if the market jumps up or down on the open. But if it doesn't jump up or down, it's going to open right about this level, and then we should go up. There's a 79% probability that we will go up from here on a seasonality outlook. So that's very bullish. Here we stand on a very long-term outlook. It's a 20-year monthly chart for the S&P 500. We were in this downward trading channel. We broke out, and as long as we stay above this line, we're good. Well, as of last week's action, you can see how we more defined getting away from that line and going north. Also, on the MACD, we have clearly bottomed and we are curling up towards that signal line. Haven't crossed it yet, but we're aiming in that direction. Histogram tells you that you're going in that direction. The slow stochastics on the monthly chart, we bottomed and came up and we're gaining distance. All of this very bullish. On an intermediate term outlook, weekly chart, each one of these bars represents 1 week's worth of action. Now, I still have in here this downside projected target, which we did reach a couple of times, and I left it in there in case we were going to come back to it, because I wasn't sure. The market action is showing so far that it's trying to get away from that, meaning that this downside projected target will not be reached again. So if that is true, we'll remove this, but we're going to leave it in there for now. maybe possibly until we take out this old high. If we take out that whole high, absolutely for sure, this downside projected target is completely gone. On the MACD, you can see that we bottomed. We've came up. That's a very bullish sign. Slow stochastics is above its signal line from the 50 line, the medium, and heading north. All of this very bullish for the intermediate outlook. Now we are looking at it on a short-term outlook, daily 1-year chart of the S&P 500, and we are in this trading channel right now with the green trend lines. As long as we stay in that, we are totally golden to keep going north. I don't think we're going to stay in that. We're going to eventually drift sideways or potentially come down, but for right now, all is good. The MACD is showing very good that it's heading north, and it just crossed the 0 line. So it's got plenty of distance to go before it's overvalued. Slow stochastics, though, is already at the overvalued 97%. So we're reached some type of a plateau on a short-term basis. Here is the same daily chart, S&P 500, but we're only going back 6 months. And I put in those same green trend channel that we're currently trading in. You can see we've reached almost the upper band of this trading channel that we're in right now. Here we are looking at the VIX volatility index, or the fear index, and we are way low. And on the slow stochastics, we are so low, we are at 1.09 on an oscillator that goes from 0 to 100. So we're at rock bottom here. So what happens when you hit rock bottom? Well, you start coming up. And when you start coming up, this works inversely to the S&P 500, which is in this black line here. When the VIX goes down, that's when the S&P 500 goes up. But when the VIX goes up, like it did from here to here, the S&P 500 comes crashing down. Well, where do we stand? We stand at this low point. We're at an extreme low on the slow stochastics, which means that there's a much more probability on a short-term basis that the VIX is going to pop up from here. When that happens, the market is going to come down. The only thing we don't know is exactly how much. Here's the S&P 500 in black right here. So we've come up, we've peaked here, and we're probably going to at least get some type of a sideways to downward action here. The probabilities of continuing going north are extremely low. Now we're looking at it on the Think or Swim platform. 1-year chart, S&P 500. Here we can see standard deviation, +1, -1, -2, +2. We just crossed the +1 standard deviation on this chart. We can bounce around above it, but the getting more gains by going up is very limited. You got about 2% from here to the +2. We haven't seen the +2 until about a year ago. So are we going to hit a +2 on this chart right now? No one really knows, but where we stand right now, we're looking like we're in an overvalued position, overbought and topping stance. Now it's the same chart, except we're going back 3 months instead of 1 year. So you can see the bars a lot more fully. Your best buying opportunity was on this candle right here when we hit the -2 standard deviation. And now we're already at the +1. So this was a fantastic run. But there was a lot of fear in the market during this time, and that's why I didn't take an overly bullish stance with all of my trading, because of how the market has been looking and crossing a lot of barriers. So the market was extremely in a weakened condition, but it is showing obviously signs of great strength. And in the last week's trading has, popped up dramatically. And here you can see on a volume bar that we even had some volume on Friday's action. Now it was the end of the quarter, so there was a little bit of window dressing on Wall Street, as they say. So we'll see what next week brings. We're still in our trade, so we're just going to sit tight. So as of April 1st, 2023, market summation according to me, SPY Trader Now. The market just had a great week, being up 3.45%, and it will need time to digest that move up. April is a very good seasonality to go long. We are currently in a cash secured put option, and this will expire on Wednesday, 4/5/23, end of day. So on Thursday in the morning, I will evaluate the best trade to make at that time if I want to take a trade. So I'm going to just sit in my current trade and just wait till Thursday and then reevaluate. I hope you have got some valuable information on how I evaluate the market and how I look at things. If you have not done so already, you can go ahead and hit that subscribe button, ring that bell to be notified when I post a video, and smash that like button down to help me promote this video. You can go ahead and head over to spytradernow.com to learn more about me and what I'm all about. You can sign up for my real-time trade alerts. And I thank you and wish you good trading.